It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
Yeah, look, with units, we have found probably a small decline, not to such of crow's nest, although typically the buyers that we're selling our apartments to would typically be a young upsizing couple or first home buyer or downsizers as well.
And that is Michael Carbone, and we'll be getting back to him with that conversation in just a moment as we welcome you back to another Real Estate Podcast. Yes, we are here every morning. You can stream us and listen to us anywhere. In fact, you might be listening to us in the gym right now, which is where you get your fix of real estate from. And from Adelaide to Townsville, talking to all of the people who matter to keep you updated on the Australian property market. It is the middle of our working week, a Wednesday morning, the 26th day of February. Now, last week's single interest rate cut was followed by a cautionary tale from the RBA, who said that further reductions may not follow. And that's unlikely to provide enough momentum to lift property prices in Sydney's weakest markets. Now, this is being expressed by various real estate professionals. Domain reports that real estate agents in areas with the steepest price declines say that more cuts are required to ease financial pressures on buyers and restore market confidence. In fact, if you look at Crow's Nest, despite the buzz around the new metro line, the Crow's Nest has been among the hardest hit, especially with their unit prices plunging 22.1% over the past year. So let's right now go to Sydney and catch up again with Michael Carbone, who is a director from Ray White 5 Doc. And good morning to you, Michael. Welcome to the Real Estate Breakfast this morning. 5 Doc, what other areas are you representing there?
5 Doc surrounding Concord and Haberfield, so the inner west, about 6 to 8 kilometres from the Sydney CBD.
And as I mentioned, the interest rate cut last week. What's the general vibe from you with regard to that?
Yeah, so obviously we've had this rate cut, talking to buyers every day and every night and, just getting a gist of, where they're sort of situated at the moment in the market. We are sort of seeing some significant changes.
So what is the buyer attitude at the moment in terms of changing since the rate cut of last year? Do you expect the trend in terms of the attitude to sort of suddenly go, wow, this is great? Or are they saying, well, that's one, a second, a third would be really nice?
True. So we are having some buyers saying a second or third would be great. Although what I can say is, the back end of last year, we were seeing the market in our core area being very sort of flat and stable. And, I think what we were seeing were buyers were just waiting to see this rate cut. Now that we have this rate cut, I'm definitely seeing some more confidence in the market. If I came back this year and saw my new open homes that I've had, a lot of the buyers that were coming through my open homes, I was having conversations about what their thoughts were with the rate cut, and I'm just getting a sense of a lot of positive attitude out there. There've been a few sales results that properties that probably were on the market late last year that hadn't been selling, that have been very stale to the market, and they've literally been snapped up in the last 2-3 weeks. So we've definitely seen some buyer confidence pick up. There's always going to be some buyers that are going to definitely wait for 2 to 3 more rate cuts, but I think your general mums and dads that have probably sold the back end of last year that are eagerly looking to buy now are really putting their front foot forward to make sure they can secure a home before we do get another rise.
Now, I mentioned Crow's Nest at the start. I mean, it's quite a lot there in terms of backward price on unit prices, plunging that 22.1% over the past year. Can I just throw that question to you with your unit prices where you are? What's your market doing in terms of that space?
Yeah, look, with units, we have found probably a small decline, not to such of crow's nest, although typically the buyers that we're selling our apartments to would typically be a young upsizing couple or first home buyer or downsizers as well. So we do specialise in some higher end apartments when we're especially, working with the downsizing market for apartments. We haven't seen such of a change in price, but with your younger upsize couples or individuals looking to get into the market, then yeah, I've definitely seen a bit of a change in that. For apartments, it's been sort of fluctuating depending on prices, or if it's a 3-bedroom downsizing apartment with perhaps water views or a special attribute to it that's appealing to a downsizing family or a downsizing elderly couple, they are still making sure that they secure that property nonetheless of the price.
So let's talk about the metro station. Of course, this has been having this positive buzz for quite some time. What's happening in your area in terms of that impacting on property values? Is the buzz still happening where you are?
Yeah, so in particular being 5 Dock where my office is situated, we do have the metro that's, currently under construction at the moment. And it's funny, when I do have open homes in the particular suburb of 5 Dock, I will get, a good amount of buyers that probably aren't from the 5 Dock area, that are maybe coming from, the lower North Shore or maybe the westerly parts of the suburbs, that have basically, pinpointed 5 Dock as a suburb that it's very close to the city, but also having the metro is an added bonus for them. So we are seeing that it is very positive. There's obviously going to be a lot of, timing of construction and things like that. Ultimately, if I've got a property for sale surrounding the metro or, within a 5-minute drive from that, I'm not worried at all. Neither are my vendors. It's bringing a lot of new buyers to the area. I work very closely with your sort of Asian market, and they see this as a very big plus.
All right then, Michael. Well, we'll leave it there. Thank you so much for taking the time out to talk about your particular area there from Ray White in 5 Docks. And thanks for coming on to the Real Estate Breakfast this morning.
Thank you very much.
Each week, we bring you in-depth real estate discussions, including inspiring stories from homeowners, knowledgeable real estate professionals and economists. Whether you're a buyer, seller, or just a real estate enthusiast, we are your ultimate property podcast.
And right now it is time for another property tip, and we are catching up with Corey Skiberis, and he's one of the partners at McGrath Northwest in Sydney. Good morning to you, Corey. You've got another piece of advice for the punters this morning.
Yeah, good morning, Craig. I do, mate. I basically just wanted to touch on, and when we chatted last time, I brought up a tip at auction of saying don't bring your calculator out at those final bids because you're just telling your competition there where you're at and you're almost at the end. Never before has confidence been more important than it is today in an auction environment. So just the tip is know your numbers and know your limits before you enter the floor. Don't show your competition where you're at.
Also, when we were talking, you mentioned that you walk around the floor and you introduce yourself to everybody. For somebody that is meeting you, what would be a couple of the things that you'd like to hear or maybe your ears prick up to?
Yeah, I mean, most things I'm just asking them is, have they bid at auction before? Have they got the experience? Is it their first time? Like those sort of things. I'm just going to really gauge where they're at, if I can count on them to make a bid or if I can look to them to make the first bid, things like that. I'm a very big believer. If you're about to ask someone for some money, you should at least know them.
Yes, exactly right. All right. Thank you, Corey, for that valuable auction advice. Now, new research is suggesting that 37% of borrowers need their repayments to drop by $500 per month to feel financially comfortable. Is that you? Is that the dollar amount? The latest rate cut last week only saves around $103 on an average mortgage, which is far from what many require. And I just want to come back to the crow's nest, which I highlighted at the top. Unit prices plunging 22.1% over the past year. Good morning if you are in Brisbane and you own a unit, because recently I spoke with Melinda, a property buyer there, and she references what the unit market is doing in Brisbane, and it's quite different to the example of Crow's Nest, and we'll hear that in just a moment. But first, I did ask her about the investor activity in Brisbane.
The investor activity actually consists of 40.5% of all housing finance commitments across our state. So that's really strong. And in fact, it's well above our average. So it indicates there's a lot of investors turning to Queensland for their investment buying needs.
Yeah, well, the growth, it is just continuing to perform pretty well in Brisbane. And you're going to tell us that Brisbane is still retaining a top 3 position. This is for capital growth in terms of monthly, quarterly and annual growth. Once again, it's all just positive stuff from your territory.
Look, it is. I think that Brisbane alongside Adelaide and Perth have been the 3 capital city markets that have outperformed over the last 12 months. And when we look at the quarterly data, this is also the case. A lot of that is due to the fact that these capital city markets have fewer listings. That's the number of properties available for sale. So there's less stock for buyers to choose from. And when that is associated with a market where there's an elevated level of demand, we see prices increase, and that's what we've seen across these markets.
Elevated price demand, that is going to continue into 2024, and we'll talk about that in a moment. But I do want to highlight the unit market there in Brisbane. What is going on? Because it continues to outperform and outpace the housing market. So perhaps just talk to that and why that is taking place.
It's an interesting trend because historically speaking, this has not been the case in any capital city market around Australia. But when we look back over the last 12 months and in fact over the last 2 years here in Brisbane, the unit market has significantly outperformed the house market. In the last 12 months alone, the unit market has increased 18.8% compared to the house market, which has increased 11.9%. And that's CoreLogic data. So you can see this strong outperformance, and a lot of that is potentially due to affordability constraints. People that are constrained by affordability are looking to more affordable options, and they're willing to make a compromise on the property type that they're living in order to get into some of the more desirable locations.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
So there could also be buyback programs before a disaster has hit. So if an area is identified as high risk area, there could be offers to homeowners to actually relocate.
We had somebody telling us about an agent that sold a property, told the buyer it was a 1 in 100 year event. All the locals knew that that was in a bad area. This person just didn't drill down and do enough due diligence, which is a really frustrating part of the process where some of these properties are identified as flood risk.
That's actually a good point with the real estate agents. There are some suggestions, for example, the flood inquiry here in Victoria from the Maribyrnong River floods. They suggest that actually real estate agents should provide information, so that we require real estate agents to provide that information. Obviously, that means that those real estate agents also need to get that information, but actually to make it part of the selling process.
We connect you to the best real estate information across Australia. The Real Estate Podcast.